Welcome, ladies and gentlemen. This is the monthly mindset for March 2023. My name is Desi. I run Cerulean Mind Academy for those who don't know. I also go by Advent. If you know me on any social media platforms like Instagram, Discord, Reddit, all that other stuff. Thank you all for being here. Usually for those who are new to this, pretty straightforward how this works. Ask me questions, I answer them. I will also be going over some questions that people who couldn't attend wanted me to go over, as well as little towards the end, I usually just give my 2 cents on like main things that I've noticed of other traders during the last month or so that may be beneficial to you guys. Cool. So with all that being said, whenever you guys are ready, you can definitely start asking me questions. You can come off mute, just type it in the chat, whatever works. Ready when you guys are. Question. So Martin said, I got a question on stop losses for a trade on Apple on 310. What exactly about stop losses? Let me bring up the Apple chart while you're typing that.
What's up, Desi? It's Martin speaking.
Hey, man.
All right. So I actually took a trade. It was on a 5-minute chart. It was let's see, 1 second. So I used this strat, but I took the trade at 7:10. And I guess my question is, what's the best way of taking profit? Because I feel like I got stopped out too early on this trade, and it did end up going in my favor.
So if it was on the 10th, let me just highlight this so we can all see it together.
Okay.
All right, this is the opening. So let's get this. Oh, duh, it was Friday. All right, cool. So when exactly did you enter on the 5-minute chart?
It was at 7:10. I'm not sure if it was like 7:11, 7:12, but I used a strat. So as soon as it hit that where's your time on there?
Man, what's the word? Are you Eastern, West
Oh, I'm
Coast?
sorry, Pacific time.
So that will be around 10 my time.
Yeah. So was it 2-2 reversal? As soon as it hit
Oh, there's
that
two
two,
left to the downside.
yeah, I took it down, but then I got stopped out. As soon as 7:15 hit, I just took profits, but then I saw it go in my favor. And I feel kind of like I feel like I leave a lot of money on the table at times. It's just kind of want some advice with taking profits and staying into trades overall.
So of course, you can take profit in different ways.
Okay.
Some people would get in on a trade when they're trading the strat from one BF to the other. So you can, if you take the rev off here and then just literally take profit down here. However, if you're trading intraday, stuff like that, sometimes if the volatility is that high, you can get good moves from one BF to another. If I find an example, I'll show you. But in this case, the way I do it when I'm trading intraday, usually I kind of stop trading stocks on the lower time frames like this, mainly because I like getting bigger moves. But in this case, if you enter on this 2-2 rep to the downside, of course, we enter once the candle breaks. Now your targets can simply be the previous candle lows.
Right.
So, for example, here we have TP1, 2, and I'll actually just clone this to make it easier. And let's just say TP3 down here.
Okay.
So in this case, just to clearly define all of your entries and stuff like that. And of course, the stop loss, for me personally, I use the top if I'm short of the trigger candle. So this will be my stop. There are some other people who they use the setup candle as their stop, which will be this candle here. However,
Right.
for me, that stop is too wide personally. So I usually just use the trigger candle. I like to
Got
keep
it.
the stops pretty tight. So in this case, once it breaks, your first target will simply just be the bottom of this pivot here.
Hmm.
And what you could have done, I think I'll probably answer this more later on in somebody else's question that they asked, but your targets just clear cut, just use the previous candle pivots if you're going short. So you enter off this, once it breaks, take 1, 2, 3, 4, and if it keeps on going, you can, if you want to, like zoom all the way back and find another 5-minute low, or literally just use the BF here.
Okay, interesting. Okay.
So one thing to do as well, do you, on average, how many contracts do you usually get when you get in a position?
It's about 10.
About 10. Do you partial out at all, or do you kind of just take everything off at 1 or 2 targets?
Yeah, no, I take everything out at once.
So one thing you can do, and just remind me real quick, you mentioned as well how you can stay in trades longer as well.
Yeah, because this one in particular, it was going into my favor and then it started going back.
Mhm.
So that's when I got scared and then I just took profits. But then, of course, you see how I could have, I left a lot of money on the table.
In the sense of when it died, yeah, but
Yeah.
the way this trade would have went for me, the same thing as you, I would have gotten in as soon as it broke this level. I would
Okay.
have taken, let's say if I had 10 contracts like you, I
Mhm.
would probably take, let's just assume I have 4 targets. Let's just say I had 3 targets just for the ease of the combo. I will take 4 contracts off at the first target right here.
Okay.
And then I'll just set either break even on the rest of them or slightly above break even.
Okay,
Let's,
okay, okay.
so let's say if the first target I hit like, um, let's say 15, 20%, whatever it may be, I'll take 5 off or 4 off, whatever from there. And
Okay.
then the remaining 5 or 6, I would set maybe at like 5% profit
Got
near
it.
my entry. Um, in this case, it almost hit the second target, but didn't. But in
Mhm.
this case, as you can see, we came up, came back up. If you had it at break even, at least based on price action, maybe not percentage wise or P&L wise, you could have stayed in this trade and kept on going, hit the second target, you could have trimmed some more, and then it finally reversed to the
True.
upside and would have stopped you out. So in this trade, the way I would have done it, would have gotten 10 contracts right there, taken 4 to 5 off there, set a stop loss near entry, maybe a few percent profit just to make up for the commissions depending what broker you use. Then remember, I'm still relaxed. There's nothing that I can do about this trade. So once it came up, it is what it is. Didn't stop me out. Cool. I'm still in the trade. Comes down. Hits my second target. I have 5 or 6. I have 5 contracts or so left. I would have taken 3 off here, and then my stop. I would have raised it from near break even to the first target right there.
Okay.
So I would have set the remaining 2 contracts there. However, as soon as it hit the second target, it came back up, reversed. I would have been stopped out at whatever this percentage might have been. That's usually and typically how I do it. It's just easier that way and it's more concise. I know some people just keep it at literally break even until they hit all their targets, but this works for me.
Mhm.
I definitely recommend you try that as well.
Definitely. Okay.
I can have Jeffrey, if you're willing, one of my students, he's here with us. You can even explain if you wanted to how that has helped you, like setting a stop loss at break even or what have you, and then raising it as you continue.
Yeah, so with my stop losses, I was telling Desi that basically um I was doing my stop losses based off option premium, which wasn't making sense.
Okay.
Because I would get stopped out of my plays and then they would just run in my direction.
Mhm.
Basically just doing by dollar amount. So okay, I only want to lose $20. So my stop loss was adjusted to only lose $20. But Desi basically said that how you should do your stop losses is find your target, where's your first target going to be, and then adjust your stop loss based on that first target being hit. That's definitely kept me in my place without being stopped out.
Got it. Okay. Yeah, I like that. I'll be trying that out this week then.
Please do.
Yeah.
Hit me up if anything, and let me know your progress on that.
Of course, sounds good. Thank you guys. Appreciate that.
Of
Of course.
course.
Thank you.
So, other questions? Thank you.
So Austin is one of my guys that I used to work with, that I work with. I told him to join, but if you could just touch on like how you do your broadening formations. I kind of touched on it with him a few weeks ago, but he's definitely new to the strat, and I don't think he's traded it yet, but I was definitely telling him that he should definitely look into it. So just like how you do your broadening formations.
Perfect. Great question, because I was actually going to go over that. Somebody asked me to go over that really quickly. All right, so broadening formations, for the most part, they're simply there they're expanding the range. For those who, when you're drawing them, I usually use the three candle bars. A 3-bar is simply a mother bar. For those who don't know, they pretty much break the previous high and low of the previous candle. 3 candles are simply broadening formations on lower time frames. So if I were to, this is on the weekly. So if I were to draw this and maybe go on the daily, 4-hour, whatever, it'll stay inside that range. So, like I mentioned, since 3 candles are broadening formations, it only makes sense to draw them from there. Now, the way I do it is just to keep it super, super simple. Some people start from right to left. Usually, I do from left to right. It's just easier for me that way. And like I mentioned, I start at 3 candles. So usually, depending what broker you're using, I use TradingView to map out everything out. I use the Ray tool. I think some people use the extended one as well. Just the Ray is easier for me. Or I don't really care to have the lines extending to the left, but you're going to take the previous high in the range of the 3 candle and just connect it to the high of the 3 candle from wick to wick. And then the same thing, this candle here, I probably wouldn't bother drawing, mainly because, you know, it's kind of pretty steep going down. However, you can definitely draw this if you choose to. To give you an example of what I mean by the highest point in the range or the lowest one, show you on the weekly real quick. Let's see if I can find a good example here. Man, those literally, am I going Bitcoin? Actually, no, I could use this. So if it does help you to practice, if you use TradingView, you can just get the box and just move it back a little bit. And then simply just finding the highest high in the range. So some people would just take the previous high and just connect it like this. But remember, we're getting the previous high in the range of the broadening formation or of the 3 candle. So in this case, you would draw from the highest high in the range. And in this case would be this candle here, as opposed to this one there. And then the same thing here at the bottom. In this specific case, the lowest low in this range is going to be the very previous candle. So we would just draw there to there. And now you have this BF for this specific candle. Now, for those who may be lazy, which I implore all of you not to be, as a general reference, when it comes to drawing them, some people always ask like when to draw them, how far back to go. For me personally, if it's the yearly, I draw them from the beginning of time. If they're like 1970, 80, whatever it may be, I start from there. And look for my 3 candles. The same thing for the quarterly, I go all the way to the beginning of time. For the monthly, same thing. For the weekly, I personally do about 3 to 5 years minimum. But you are more than welcome to do, I would say at least for safety, at least 3 to 4 years. Or at least 3 years. For the daily, I do at least 2 years minimum. It can definitely get, I think on Apple, I went pretty far back. Yeah, so for the monthly, for the quarterly, yearly and monthly, I do it pretty much from the beginning of time. From the weekly, I do at least 3 to 5 years. For the daily, I do 2 years minimum, and you can go as far back as you choose. So on Apple, also if you're using TradingView, definitely use the object tree. That way you can save all your BFs in there.
Yeah, that's a game changer.
That way, if you're charting and stuff, or even when you're drawing them, if your chart looks like this, you're doing your BFs properly. It should look like a laser show. Some people color code them. So let's say like they're yearly or monthly or whatever. You just simply go and just change it to a different color so you can know, all right, cool. Once this hits this thing, this is the yearly. Whatever helps you personally. For me, too many colors kind of like confuses me in a sense. So I just keep everything simple and concise. It's so weird. My yearly BFs came out. Anyway.
Now remember I was telling you how my 4 screens only show BFs on one screen, even if I have 8 screens up, 3 screens, 2 screens, it's only going to show BFs on one. What was that thing that you said to try to sync your broadening formations?
Oh yeah, so on the right side, where is this? Let me actually bring ES up. So on ES, when I bring this up, what I do is first on all your BFs, click sync globally, because I was noticing, so my chart on the top left is like the master chart for the BFs, and then everything is just like an extension. And I've noticed that some of my BFs were not showing up on these. When I went to check the settings, they were syncing layout, which should sync it on everything as well, but it still wasn't working for whatever reason. I guess this is just a bug or a glitch with TradingView. So I just sync globally. And after I did that, it showed up on every single square that I had.
So you said you just right click the folder?
Yeah, just right click the folder, sync globally.
See, that's my problem. I only have sync and layout.
Using the browser or the or like the app or program.
Oh, I don't have the program. This is the website.
Try if you can the program itself and see if that helps. If not, contact support.
Okay.
If they know what it may be. Because I had somebody else tell me that too, that it was only showing sync and layout, which is weird.
So you're running off the TradingView program, downloaded to your computer. Okay, I've never tried that.
Yeah, because when I used to use it on my, at least on my old computer anyway, the browser would slow the computer down too much because I would have like a bunch of tabs open.
Yeah.
But the platform is definitely more efficient. I haven't had any issues with it. So definitely try that and hit up support, see if they can help you on that and go from there. One thing to note, for whatever reason, when you're switching between the layouts, like the squares, it'll move different things like wherever you have it set at. So like on the first one, I have all my indicators up here, my BFs on the bottom, but here it's like reversed for whatever reason. I have no idea why.
Now at the top where you're able to keep switching from ES to Apple to IWM, is that a feature that's on the program? Because I don't see that on the website.
If you don't, it might be something with the platform itself, I believe, where it would have, you can open multiple tabs up. So if I wanted, I can have like literally 10 different tabs.
Yeah, I don't have that. Okay, I'll try the program.
You just remember, just to be as efficient as we can, because what I was doing before, I'd imagine you may be doing it as well. If like just going like searching up different tickers over and over and over.
Yeah, that's what I do.
Yeah, it wasn't as efficient. So for me, I just do this. Also, real quick to show you guys, the BF I draw on the weekly, as we can see here, it was trading in this range on these days. Bounced off perfectly, rejected off, then they killed it, brought it back up. Now we're trading here, rejected perfectly off again, and then we're down there. Universal truth.
To the T.
Yeah, it's crazy. Game changer.
So if you were gonna trade coin tomorrow, would an ideal contract to get in, because I know you said 7 to 14 days for a 4-hour trigger. March 24th, $60 call. Because I have a BF like at 59.60 for a weekly.
It depends. So in this case, you can take the 4-hour trigger to swing it if you choose to. And of course, like I mentioned, at least 2 weeks or more. What I would personally do in this specific situation, or at least to better answer that question, if you're looking to swing it, then I would definitely choose like 2 weeks or more. If I'm looking to just day trade it and take it off 4-hour, I'll probably just get a weekly.
Okay, like
And
expiring Friday.
Yep, and I'll probably choose anywhere between a 56 to a 57 strike price.
Right, because the 212 would complete at the 56.40, which would be that 2 candle.
Yep,
So you're trying to stay as close as in the money as possible.
exactly.
Okay.
Now, of course, if whoever may be watching this, if your accounts don't, if you don't have the capital yet to take big trades like that, then you are definitely welcome to get a little further out with the money. Like 60 would be near the second target. Although in this case, my second target will be the gap right there. So the first target, second target, third, and then keep it moving from there, or whatever BFs may be in this area.
Gotcha.
Cool. I don't believe Richie is here, but he asked where to begin with in trading. So hopefully you'll follow me. I'll give you a few things to start with. So first and foremost, just to give an overview, understand that this is a marathon. It's not a sprint. Don't compare yourself to other people. If you see people making 50, 100%, 200%, whatever it may be, all these gains, don't get too blinded by the money. Remember, we don't know if they've been trading for years, months, whatever it may be. You always want to focus on where you are at and really focus on the process and creating your own process. And I'll touch on that in a bit. But first and foremost, start journaling. Keep a journal of all your trades. What you want to do is collect data and discover the type of trader you are, seeing where you excel at, where you underperform at, stuff like that. Like for me personally, I find trading reversals is a lot easier for me than maybe continuations or trading continuations or like scalping and stuff like that. I don't really care to scalp. To me, at least for my trading personality and like for myself, it's a little fast for the most part. So journaling will definitely be a great tool that'll help you discover what type of trader you are. You can journal things like what I mentioned. What type of trader was it? Was it a reversal, a scalp, a breakout? Different things like that, just to find out what type of trades work best for you. And please, when you first start, paper trade. People tend to see it as a bad thing. I have no idea why, but paper trading is going to be paramount in helping you, especially when you're trying new things out. You don't want to use real capital when you're using or trying new things out. Like even for myself, when I'm testing new things out, I go back to paper because I'm not going to bother wasting or using real money or losing real money while I discover something new. Like for example, I mainly trade strat using fibs that I learned from Trust My Levels, but ICT, I'm still relatively new to it, and I've been practicing some ICT concepts and some trades based off of that, but it's been all paper for the most part. And the things that I'm comfortable with now, I use my real account. But for the most part, use paper and use it as long as you need to until you find consistency in whatever it is that you're doing. And what I mean by that is at least give it a month or maybe even like 2 months until you start seeing some consistency. All right, this works, this doesn't work. Whatever works, keep a note of all of that. Whatever doesn't work, keep a note of all of that as well. Whatever does work, keep on improving and fixing that. For whatever doesn't work, limit that or just stop doing it completely. To give you more terms that may help as well. And Richie, whenever you do see this, reach out to me. Let me know if all that made sense. Technical analysis, very important. How to read charts, understanding candles, study chart patterns, candle patterns, tweezer tops, morning stars, double tops, triple tops. There's a bunch of different patterns out there. Just study them, look at the chart. Also, I just remembered this. What I've noticed a lot, I help support some other groups as well. And there's a group where they always tell, like, I see a lot of people telling newcomers, like, oh, like use this indicator, that indicator, or this moving average, all of that. Personally, indicators are useless, or specific ones anyway. For VWAP traders out there, I salute you. Anyway, but like moving averages, they're lagging indicators, which means, I know there's a strategy like, oh, if this EMA crosses this one, you go long or short or whatever. What you want to do for the most part is just have naked charts like this, just so you can clearly see what's going on. Because the indicators will kind of like put all, it'll convolute the screen and kind of confuse you. And you may get conflicting signals, like, one indicator might say go long, one other one might say go short. So don't bother with indicators in the beginning, if at all. Just focus on price action and learning how candles move, how to read them and all that other stuff. And like I mentioned before, focusing on your system and your process and focusing on that, because that's where the money is created from. It's created from your process and your system. Some people that get too caught up in the money usually get messed up by that, mainly because they're too focused on the money instead of actually focusing on what's in front of them and what works and what doesn't. So definitely focus on your process, and the money will come from that and developing it. Another thing is studying your broker, learn the ins and outs of it, how it works, the tools that it presents to you, setting stop losses, limit orders, what they are, market orders, and the difference between all of them. Another important thing, choose a market that you want to learn, like whether it be the stocks, futures, crypto, commodities, Forex, all that stuff. Just choose something and just focus on that. And once you do that, once you choose whatever you want to start at, choose 1 or 2 tickers. That way you can focus on them and learn them. Like when I first started trading, I didn't learn this until later on, because I was trading penny stocks when I first started, and it was just like a dozen of them a week. But what would have helped me in the beginning is just choosing 1 or 2 stocks that are liquid, which means they move relatively, they move a lot during the day. Some people recommend like the S&P 500. You can choose like an index like that. Even Bitcoin, if you want to look at crypto, just because they're pretty fluid and they move a lot during the day. And just master how those work. And then from there, you can branch out to other stocks. Let me know if all that made sense, Richie, whenever you do see this, and get back to me. And thanks for your question. That's definitely a great one. Dora was here earlier. Dora, whenever you do see the replay, you mentioned the question. It just said mindset. If you can elaborate on that, I'll probably, or just when I post on YouTube, maybe you can just elaborate on that in the chat or in the comments, and then I'll respond back to your question there. Because mindset is it's a little vague and broad. The only thing that I would imagine to tie that into was what I said earlier. It could be several things, but having the mindset of, or the mentality of, I'm going to be focusing on my process and not the money, because when you focus on your money, you're going to open yourself up to a lot of things: emotional trading, over leveraging, and not respecting your risk, a lot of other stuff like that. But yeah, just expand on that whenever you do can. Marcel, I saw you jump in earlier. If you have any questions, before I continue answering other questions that people had that couldn't attend, you can come off mute or you can type it in the chat. Let me know.
Yes, man. I had a question. Do you teach futures?
Yes, I do.
Okay, you have a course, or
I don't have a course yet. This is more on my one-on-one sessions, or
okay.
For like any mentorship students that I have. I only have an options course so far. I haven't made one for futures yet, but bear with me. That is coming in due time. But for now, I just have the options course.
Awesome. Okay, so you do one-on-one mentorship on the futures.
Yep. Futures, pretty much anything that the individual comes to me for.
Awesome. All right. Thank you, man.
Absolutely. In the meantime, did you have any questions that I can answer really quickly about them?
No, man, you pretty much answered the question about just focus on 2 tickers, kind of focus on one market instead of trying to go, all over the place. So you pretty much answered.
Cool. Definitely glad that helped. Yeah, like even for me, I do trade multiple markets like Forex, crypto, all that stuff. But what I found is that dipping my toes all over the place kind of took away from effectively and trading everything efficiently. So I kind of took a step back. For example, usually like during my week, I either choose ES or maybe one other ticker futures wise to trade. And then I'll choose maybe one option or one stock to trade options on off my watch list. I know I usually have maybe like 7 to 10 tickers on it, but I only choose 2. One futures thing to focus, which is usually ES, sometimes NQ. And then whatever setup I like the most off my watch list, I'll just trade that. Just for me personally, again, it's just a lot easier for me. I tend to get overwhelmed easily. So just for me, I just focus on 2 things during the day and just keep it simple like that.
So how long do you think you should stay with one market till you move to the next market?
You don't, I guess that's a little subjective. Honestly, as much time as it takes, if you feel, it's a little weird for me to answer that in the sense of like, because if I've mastered a market, I kind of just stick to it in the sense of you can definitely branch out and like experiment. I'm definitely not going to knock anybody on doing that. I would say as much time as it takes until you're fully confident that you can trade whatever it is that, whatever it may be, as comfortable as you can, until you become consistent with it and you're getting consistent results out of all of it all. Like, for example, like I mentioned, I started off trading penny stocks and moved to options. And then from there, I started trading crypto futures. And then I only really got into Forex because of my cousin. He trades that. And And then futures, actually, I started trading last year around maybe August or September. Yeah, sometime around that. It just made more sense for me, mainly because, you know, if you're going to trade SPX contracts, might as well just trade ES, kind of the same thing, or pretty much the same thing without worrying about the Greeks and theta and all of that. But yeah, in that case, it's literally just spend as much time as you think you need to, whenever you're consistent in that specific market. And the reason why I kind of said it like subjective or relative, because once you master and you're making your money off of a specific market, just stick to it. If that's where all your bread and butter is coming from, just stick to it. Like for me, I just stick to futures day in and day out. And if not, then I have options as a backup. And for crypto futures, I still trade them, but usually just swing trading. Most of the time, I maybe take like 1 day trade for crypto a month, if that. Mainly because I don't really care to like analyze it during the day and I'm focusing on other things. But if the setup is good enough, if I happen to glance at it, I'll take it. But for the most part, I just swing trade crypto, have that cooking in the back while I trade futures and options. Cool. Let me know if that makes sense. And thanks for your question. I'm going to lump these two questions together since they kind of go hand in hand. Actually, I'll go over this real quick. To go earlier over what you were mentioning, Martin, in regards to staying in trades longer, and even for the ones who asked this question, you can always use the higher time frames when you're getting in trades. So what I like to do is, or what I always tend to do is, let's say, for the sake of the conversation, let me connect all of these. So the way you can stay in a trade longer, let's say you take the trade on the 5-minute chart, you take this 2-2 up for the sake of the combo. What you want to see is, what are the higher time frames doing? Are they in your favor? Are they not in your favor? X, Y, and Z. What you want to do is, if you get in the 5-minute and you're making a profit, whatever it may be, you can flip to the 15-minute and see what's going on. If the 15-minute is continuing as well, then you shouldn't be getting shook out. Like if the 2-minute or 3-minute are reversing on you. You want to always look at the higher time frame to see what's going on. For example, for the sake of the combo, let's say this is the 5-minute entry. And right here on the right side, I have my 1-hour chart. So let's say if I got on the 5-minute right here, and then this would be the 1-hour 2 up. So pretty much my first target based on the 5-minute would be the 1-hour trigger. So if this triggers up on the hour, but we're reversing on the 5-minute and it hasn't hit my stop yet, I have no business getting scared out of this trade, because now the 1-hour is flipping in my favor. And then of course, you can always map out the higher time frames. So now I know the first target on the 1-hour is going to be the trigger for the 4-hour. So if this triggers, then you're definitely great to even stay longer in your trade. Always look at the higher time frames so the lower ones don't shake you out. And for the individual who did ask that offline, please let me know if that makes sense. Because what I found and what I see some people do is they'll be on the 5-minute and then they'll look at the 3-minute or the 2-minute and be like, oh my God, the 2 minute did a 2-1-2 rep. I got to get out of this. But it's like the 1 hour, 4 hour are bullish. So there's zero reason for you to get out of that long trade. Now, Martin, like me and you both, trust me, I used to do the exact same thing. So definitely use the higher time frame to keep you in a trade. And also, this is why I mentioned earlier, learn and know how your platform works. And just create an efficient environment for you to succeed. For me, I used to trade only on one chart. But it would be, you know, if I'm on the 5 minute, I'm getting all this noise. So what I like to do is, well, you'll see my setup like this, is because in this case here, I'm seeing what the overall picture is doing as well as the lower ones. So I can be at ease and being like, all right, cool. The 5 minute is triggering, the 1 hour is triggering. I have no reason to get out of this trade, as opposed to if you're on the 5 minute and it's, let's just say you get in on this 2-2 up, and then they reverse it here. And then you would have missed this move. Granted, the higher time frame might have been bearish there, but all in all, look at the higher time frame just so you don't get shaken out of your own trade, and so you can see the overall picture. Because if you know what's going on, you're not going to be confused. You're not going to be that prone to your emotions. And trust me, when you're using real money, your emotions are definitely going to pop their head out. So just use the higher time frames to get in. And you can also use the higher time frames to get in on your trades. Like for me personally, I don't use anything under the 15 minute when I'm trading like options, mainly because I'm usually in it for a good amount of time and I like to get the bigger moves. I don't really care too much about like the quick little 5 minute scalps in and out. Cool. So probably answer 1 or 2 more, and then I'll go into the last little thing that I'll mention, and then we'll end it. Somebody mentioned patience when trading, and also in conjunction with that question, somebody else mentioned patience over trading, discipline, cutting losses early, letting winners run. Kind of answered that earlier. For over trading, for me to answer that a little better, it would be easier for me in the sense of to know what is causing your over trading. Like, do you lose a trade and then you like revenge trade and then you tend to trade a lot because of that? Are you over trading because you win some trades and then you get greedy and then you get euphoric and start trading even more? For the person who asked me that, well, I think it was Streets asked me that, and somebody asked me the other question. Definitely let me know exactly what you guys mean, both of them. Definitely let me know what you mean by over trading, and specifically like what's going on in year end. And I'll be better, and I can better answer that. But just to give you some overview, if it is emotional, if it is based on like your emotional state, like if you're euphoric, or you're greedy, or what have you, definitely practice breathing exercises. Take deep breaths from your belly, inhale through your nose, and then bring it up from your belly, expand to your chest, and then just hold, and then exhale slowly. This will help you bring back your logical mind while you are trading. That would take a step back and see what's going on. Also, take a break like 3 to 5 minutes every hour just to clear your head, because it can definitely get taxing and you can get tunnel vision while you're trading. Definitely take a break, breathe, bring back your logical mind to help with that. I wrote down here as well, create rules that would help you limit your risk or to stop you from over trading. For example, for me on the negative side, or like the losses side, I have a rule that after I lose, if I lose three losses, I stop trading. Or if I lose 3 times, I stop trading for the day. I turn my screen off and I go about my business. I come back the next day, I journal and just come back another day. Or a max loss per day. So either stop trading after 3 losses, or let's say for the sake of the conversation, if I hit negative 500 for the day, I stop and I call it a day. One thing that I had some individuals do that has helped them is create a checklist for your trades. For example, you can have a checklist in the sense of, and physically write this down and have it in front of you while you're trading. That way you can physically check it off. And if any piece of that is not checked off completely, then you can't take that trade. That way you can take your best trades. Some questions that you can write down in your requirement checklist would be, is this one of my setups? Is this a counter trend trade? The second one, you can be a little lenient. For people who've been trading long enough, you can take counter trend trades, but you'll need to be more of an experienced trader to know when to take counter trend trades. But for the most part, you don't want to fight the trend, you want to be going with it. So is this one of my setups? Is this a counter trend trade? Am I breaking any of my rules by entering this trade? Is this trade planned out? Is my entry, target, and stop loss mapped out? Is the trade strategic? Is this a strategic trade? Or another question to ask yourself, is this trade an emotional decision? Greed, FOMO, revenge, whatever it may be. And then you can check all of those things off. Is this one of my setups? Nope. If you hit no on that first question, then don't even look at your screen. Don't even bother even getting that trade ready to go. Because like that first question will stop you completely from even getting into any trade. And then just go through the list. If any piece of those things aren't checked off or in your favor, then no trade. Again, for those watching the replay, you can add this and make this your own. And you can add more questions to that if you choose to, but is this one of my setups? Is this a counter trend trade? Am I breaking any of my rules by entering this trade? Is my entry, target, stop loss mapped out? Is this an emotional trade? Am I trying to get back at the market, whatever it may be, and go from there? And let me know if that works when you guys try it out. Cutting losses early in that regard, I usually recommend hard stops. Some people like myself, depending what I'm trading, I'll use either mental stop. A mental stop for me means quite simply, let's say I'll set an alert here. If this is my first target, and let's say my stop loss will be down here. I'll set an alert. And then once the alert goes off, then I'll manually get myself out of the trade or take profit, whatever it may be. But if you're not good at getting out of trades, then use hard stops. So let's say, for example, if based on the trade, when it hits your stop, if it may be negative 20%, you can set your contract at negative 20%. Or you could use trading stop losses and stuff like that to help. I also put like letting winners run. You can set a stop loss and profit and just keep on increasing it, like I mentioned earlier today. If you find that you are cutting your winners too quickly or holding your losers too much, like I mentioned, hard stops, trading stop loss, all that stuff. Setting alerts, that way you don't get tunnel vision and you get like locked into the screen, because when that happens, we can kind of get in our own way and sabotage ourselves when it comes to trading. Especially if I'm taking a trade off the 1 hour, I don't need to literally just sit in front of the screen all day. I can just set the trade, set the alerts, and go about my business. And let me know if that helps. For discipline, a lot of this is really going to be practice. Start slow. I'll just give a scenario for it to make sense. Discipline in the sense of, over time, this does get easier. Having your rules, having your checklist, all that stuff. Not only this, I mentioned this to one of my students, and even what I found about myself was your personal life is going to affect your trading a lot. So if you're not disciplining your trading, you're probably not disciplining your personal life. So you would want to take a step back and analyze and just look at yourself in your personal life and see where you may not be showing up in or being disciplined, and starting there. And from that'll bleed into your trading and vice versa. If you're not disciplining your trading, you're probably not disciplining your real life. And if you're not disciplining your personal life, then you're probably not going to be disciplined in your trading. For me, disciplined practice that I do in regards to my trading, I have a morning checklist, like a morning routine. If any one of those pieces is not completed, then I part of my rules and a commitment and a non-negotiable that I made for myself, if any one of those pieces are not completed, then I do not trade until they're completed in full. Let's say if something happens and I haven't completed my routine and it's like an hour after market open, it is what it is. I'm going to just take the L, I guess, mentally, and just wait until later. If I got to wait 30 minutes, an hour, 2 hours to start trading, it is what it is. Because while you're trading, your state is everything. If you're sleepy, if you're tired, if you're not focused, then it's gonna affect you when you're trading. We want to make, I guess I'll segue into what I was gonna tell you guys on my own part, like something I want you guys to learn or take away from this specific session is you want to make your trading time like sacred. You want to give it the respect that it deserves. You want to come to it properly and efficiently. If you're sleepy, tired, all those things, you're not giving it the respect and you're not giving it the respect that it deserves. So you want to set yourself up for success. Be efficient, be focused. All of those things are going to help you succeed. If you're sleepy and taking trades half awake, I can tell you from experience, that's not going to help you succeed. Don't have any distractions while you're trading. For example, when I'm trading, I put my phone on do not disturb. I let people know, hey, during this time to this time, don't call me unless it's an emergency. I'm trading, I'm working. Some people who don't trade, they don't see it the way we may see it. Like, oh yeah, they come and talk to you, they call you, they hit you up, whatever it may be. And it's understandable. They might not see this as a job or whatever it may be, but if you're trying to take this seriously, you have to treat it as such. If you're focused, and be like, hey, look, I'm working right now. I'll be available in an hour, 2 hours, whatever it may be. And just let them know from there. But while you're trading, just make it like your sacred space. Limit all your distractions as best as you can and go from there. One last thing that I'll mention, actually, I'll keep that for the next one. But yeah, let me know if all that made sense. Give me a yes in the chat and all that stuff. The last thing that I'll quickly just touch on before we're finishing. Yeah, definitely keep your trading time sacred. The last thing that I'll quickly touch upon that I saw a lot this week is risk management. A single trade should never, ever, ever wipe out a week, day, months, whatever it may be of profit. That means you're way too over leveraged. you're probably revenge trading. You don't have any rules set, all that other stuff. You don't have any practices to help you. So just to going back to the basics, risk management is key to allow you to survive in this trading business. One thing that I do that can help with this is I use the same position size in all of my trades, and I compound my account to keep in accordance to that. And I would never take a trade that is less than what is it? 2 to 1 or 1 to 2 risk reward. So I'll risk 100 to make 200, but I'll never risk 100 to make 100. It doesn't make sense. I'll sometimes even go to the lengths of even 3 to 1s. So, you know, let's say for the sake of the conversation, on average, I will probably be making $200 or $300 per trade, but my losses may be like $50 or $100 per trade, depending on the specific setup. So one loss is not going to wipe out a bunch of gains. And I see a lot of people falling victim to that, where they'll win for a good amount of time, then they get confident, they over leverage, they lose that trade, then boom, all the profit's gone. So you want to just slowly increase your risk and your position size as you continue to grow your account. So quick little example before we start wrapping up is if you, let's say, have a $2,000 account, I myself use 10% of my account in each trade. I would have $200, let's say, maximum per trade. Let's say I win that trade and I make, and you know, I win a few trades and now I'm at 2,200. Now I can put $220 per trade and keep on compounding my account. Because what I see a lot of people doing, what I did was what I see people doing, what I did before was over leveraging and raising your leverage and using too much capital too fast. Like they'll go from 200 to like 500. Well, their nervous system or their emotions may not be ready to take those losses. Of course, in your head, it sounds great. Yeah, if I've been winning my $200 trades, let me go to 500. Now I'll win 200, 300, 400 per trade. But you may not be ready for the losses because you may have been used to 50, 70, $100 losses. But if you get to 200, 300, 400 losses, you're gonna be very emotional, especially if you're not used to that. So we want to slowly increase our position size per trade. Cool. All right. So hope all that was helpful to all of you. What is everyone's, or for the ones who are here, give me one of the biggest takeaways that y'all got out of this session. You can let me know in the chat, come off mute. And after that, we'll wrap up. You can let me know in the chat, what was your biggest takeaway from the session? Definitely give the market the respect it deserves. You will find yourself on the wrong side of the fence if you don't.
I got a real quick question. How do you base your 1-2 or 1-for-2 ratio? What do you mean by that? Or how do you do the math on it? Like, how does that work?
You can, if you're using TradingView, you can quickly use the, let me bring up my chart real quick. You can quickly use the, let me bring this screen big. You can use the, let's say, the long position. So let's just say for the sake of the combo, the trade would stop me out here. So right here, the risk reward is 3.25. So, and that's at the first target. You know I'm taking this trade tomorrow, assuming they don't gap us up, which I really hope they don't. If I, you know, this trade right here, perfect. 3.25, I'm definitely taking that. The second target, we got 4.31, and so on and so forth.
Gotcha.
But of course, you know, have the targets within reason. People don't do like, oh, yes, it's a 20 risk reward ratio. I'm gonna take this. It's like, all right, be realistic. But anyway, based on the first target, it's a solid setup. Yeah, definitely. Marcel mentioned, don't focus on the money, focus on the process. Remember, the money is generated from the process, not the other way around. By following our rules, taking our setups, all that stuff will allow us to make the money. When you start focusing on the money, you bend rules, you break rules, all that stuff. We don't want to do that.
Say biggest takeaway is just reiterating risk ratio. Because I do notice that like a couple days winning, buying 2 contracts, Thursday I'm buying 4. So gotta respect that.
Absolutely. And of course, it's okay to use 2 or 4 contracts as long as the dollar amount
Yeah.
is very similar. Because, you know, there might be some other tickers that the contracts might be a little cheaper where you can buy more. But as long as like the dollar amount is relatively consistent, you'll be fine. Sweet. Well,
Thank you, man.
absolutely. Thank you all for coming out. I appreciate the questions. This will be uploaded to the YouTube. It'll probably, for any of you who may have missed anything, it'll be up probably by tomorrow morning. Thank you all again for coming out, and I will talk to you guys soon.
Peace out. Thank you, man.
Later.